your bank. We're joined by Congressman Scott Garrett, Republican from New Jersey, member of the House Financial Services Committee. Also with us, Jonathan Capehart, MSNBC contributor and Washington Post editorial writer. Congressman, welcome. Walk me through your views on, excuse me, specifically why there's so much resistance in the reform that's being proposed in House Financial Services as we watch the extraordinary profits being made by these banks that obviously the taxpayer did such a wonderful job of supporting. Why there's so much resistance to putting the very credit derivatives that got us into this mess, that created too big to fail, onto an exchange where we can all see what the price is, what the collateral is, everything else that I can see with a barrel of oil, a stock, a bond, whatever it is. Only credit derivatives at this point are a huge market, no exchange, and the taxpayer's on the hook when it goes wrong. Why is there resistance to create an exchange for credit derivatives?
Yeah, but before I say that, I would say I listened to everything you said in the intro, and I think you're right on the mark describing how we got here, what the problems are, and why the problems are continuing down the road. I think there's not pushback to say that we don't need to do something. There's not pushback to say that we don't need reform in this area. I think the pushback is to say is, look, of all the problems that are out there, we have to address where the underlying causes to the mess that we're in right now came from. Derivatives, yeah, were an element to it, but really the problem was in large part due to faulty government regulation and enforcement, such as the AIG situation. It wasn't so much the derivatives over there, it was the OTS not knowing what they were doing and going into their financial products section and looking at them and saying, hey, you know, these guys should have some capital put up here, and they didn't do it, so it was a regulator's fault. So the Republicans are coming back and say, we can address some of those problems by saying, maybe we don't need an exchange, maybe we do need clearinghouses where all this stuff goes through. Maybe what we can do is have a repository so we can get the transparency on both of those fronts. And you get that information out to the public, and that's how we see it, without creating a whole new, massive, new, additional regulatory structure that we don't need.
Yeah, I understood. I'll come back to the exchange. I spent a long time last fall when I was working at CNBC in the apex of the crisis, talking to Terry Donahue, who runs the Chicago Mercantile Exchange. A bunch of other exchange CEOs made it very clear that they could easily list all these credit derivatives on an exchange, and it would solve a lot of these problems. But I want to come back for that. What is your view of the bank profits and unemployment, and how do you reconcile the profitability we're seeing at Goldman Sachs this morning or JP Morgan yesterday with the obvious distress that continues to manifest itself in the jobs market?
Yeah, it's hard for me to reconcile those two. I guess what's happening is you know, you see nominal numbers, and so it's from where we were 6 months ago or 9 months ago, and hey, we're doing really great compared to that time, even though my portfolio has shrunk, you know, 50%. From that 50% point, it's gone up 10% or 20%, so everybody feels good about that. But you're right, the unemployment numbers show that we are in a jobless recovery. Manufacturing businesses are still doing poorly. The Main Street out there is doing poorly. The real unemployment numbers, not the numbers that some of the people talk about here in Washington, are still sorely bad numbers, both in my district, which is in New Jersey, but in other places much worse than that. So it's hard to reconcile those two.
Well, the only answer I've been able to find journalistically is that the rules of investing have been abdicated on Wall Street, that the government has stopped enforcing rules on Wall Street that makes individuals on Wall Street invest to make their money. And what I mean is Warren Buffett, venture capitalists, those who put money into our economy to create jobs and allow development in our country are the most precious people we have next to our innovators. Investors and innovators are why America is America. And what appears to have happened is that the rules of investment, as enforced by the government, either by way of tax code or by way of indulging off-transaction, off-balance sheet shenanigans, even if it's unwittingly, have allowed people on Wall Street who have it's hard to be an investor, to find a much easier way to make money, which is to play parlor games with taxpayer money. It pays well, and it's legal. And that's the government's responsibility to restore an investment culture to this country.
And that's it. And here's the problem is I go to these receptions that you have down here in Washington, D.C. to meet with people, constituents, and who do I meet with? It's the investors groups who used to be meeting, I guess, in Wall Street and around the country as far as where they should be investing. Now they're coming down to Washington for just the reasons they're saying. They want to meet, find out what the tax policy is going to be. They want to find out when the next bailout's going to come. So it's really, we've turned the country on its head, so to speak, as to where the entrepreneur should be. He shouldn't be in Washington, D.C. to see whether he can get another bailout. He should be out in the 50 states to see whether he can create something new of value.
But I think people in this country understand that because it's easier to make money right now lobbying the government for some sort of a loophole or benefit than it is to go out and try to do it better. It's very competitive. Technology margins are much narrower than they used to be, especially on Wall Street. It's much easier to get some loopholes and work off balance sheet than it is to try to do it better. Again, obviously that's my opinion, but there's a lot of data to back that up. Jonathan Capehart, you want to get in here?
Yeah, I have a question, a very naive question for the congressman. What do you say to the people out there who look at the fact that the Dow Jones has gone up continuously since March, and that it's now over 10,000, and who might think that, hey, you know, if the market's doing better, at some point all of that momentum will trickle down, to use a very bad phrase, but to trickle down to Main Street and pull Main Street along with Wall Street. Is that incredibly naive?
I think it is, because you're really only looking at one segment of the economy, and Wall Street, of course, is just a small segment of the economy. You have to tell those people who ask that question, hey, let's look at another factor. How about the value of the U.S. dollar?
Right.
And as that continues to go off a hill, or off a cliff, I should say, Main Street is not going to be doing well, and you and I, just regular folks, aren't going to do well either.
And Congressman, is the reason why the dollar is going off a cliff is because there are so many dollars out there, trillions and trillions of dollars out there, that's helping to weaken or devalue the dollar?
Oh, sure. I mean, when you said at the lead-in here that, you know, Bernanke said he'll just print as many dollars as we need. He always tells us every time he asks this question, I'm not monetizing the debt, he says, but boy, it sure looks like it to me.
If it quacks like a duck and walks like a duck. Anyway, Representative, anything you can do to restore an investment culture for this country and get rid of this vampire culture would be greatly appreciated. Thank you, Representative. Much more ahead here on the Morning Meeting.